All right, top of the hour. We're going to go ahead and get started on this webinar here with Angel Oak. And I did just hit the record button. So we are recording. And like I said, recording on these webinars, it's a 50-50 deal. We'll see what happens. They've been really good lately, and hopefully it does work well. And when it's done, or when the webinar's done, we'll process the recording and make sure to get it out to you guys, hopefully sometime today, if not tomorrow. Anyway, want to get started. I'm here with Tom Hutchens with Angel Oak Mortgage Solutions. I am Frank Garay. I'll go ahead and share my screen just momentarily so that people can see me, because I know everybody loves to see me. I mean, why not? Why wouldn't
Oh, there
they?
you are.
Right?
Looking good as
Why
always.
wouldn't they? Right? You know, got my bicycle shirt on. Right? Rode my bicycle in today. Along the lines of trying to be healthy. For those of you who just joined us, we were kind of BSing before we started the webinar here, talking about health and resolutions and that kind of a thing. But today, guys, I'm glad you tuned in. This webinar series has been really good. This is our third or fourth one with the same content matter, so people are very interested in it. I'll just kick this off to Tom here with this opening remark, which is something that we just mentioned, which is I think everybody in the lending industry is certainly feeling, the slowdown of originations. Everybody, we've just come off a really great refi high, which happens all the time. And I know even though a lot of us really still fight for the purchase deals, even when we're going through the refis, as the refis fade away, and even if you were, working the purchase angle, I think we're all going to still find that we have to work that purchase angle a little bit harder. And the reason being is that purchase deals are a little slower right now too, and it's not necessarily because people don't want to buy, and plenty of people want to buy. The thing is, we just have a lack of inventory. So there's not a lot of homes, so it's going to essentially equate to less sales because there's just not enough there. The good news is, I was chatting with Barry Habib last week, and he says, look, the good news is household formations are up, and so we're still forming households like crazy. They're going to need places to live. So once inventory starts coming back on the market, we should still have a good, strong purchase market going forward. But the point being that I wanted to make here, and I'll hand this over to Tom, is that with pipelines getting slimmer and getting uh, more challenging to fill up, I think that looking into non-QM products is a brilliant idea, and it's something that everyone needs to look at, because it's a viable book of business that's out there, and a lot of people don't realize they can do something, and they can. And I think our real estate agents don't realize that they might have a potential buyer. They might ignore the potential buyer because they don't think that he can do something when really maybe he can. And that's why we're going to turn this over to Tom, because today we're going to talk about how to find these non-QM borrowers, how to qualify these non-QM borrowers, and how can we get some marketing materials to help in our efforts to find these non-QM borrowers. And after that, we will spend some time answering questions, and we'll take it from there. So does that all sound fair, Tom?
Yeah, that's great. Good, good,
Okay.
good intro.
Okay.
Thank you, Frank.
So what I'm going to do is I'm going to go ahead and pop on over here and pass you the screen. Let's see if I can do
Okay.
that here. Make presenter. And I'm going to say, okay. And you should get something that says you have the screen. And once you've got it, you just go for it. And I'll chime in from time to time if that's okay. But with that, Tom,
Oh, yeah, please do.
I would like to hand it over to you.
Okay. Frank, just help me with what screen are you seeing right now?
We are seeing Angel Oak Mortgage Solutions, the front screen of your presentation.
The
Some guy,
presentation, not my website.
not your website. I'm
Okay.
seeing the presentation.
Okay.
I'm seeing a guy that's about to fall off of a mountain. A guy in a very
Yeah, there
precarious
you go.
position. Yeah.
All right. There we go. Perfect.
All right.
Okay. Well, thanks very much, Frank. And I think you kind of hit the nail on the head of what's going on in the industry, with the refis, with the lack of inventory in the purchase market, which ultimately translates into lack of or more limited loans. So, I think more and more every day we're seeing loan officers across the country that you don't want to miss on any deals. If you have a potential buyer and the buyer is a quality buyer and deserves to get a loan, then I think it's in everyone's best interest to find a way to get that buyer a loan. And that's kind of what we're all about. So with that, I'll just kind of start. Here are just a few things I want to make sure that we cover. First is how do we find these customers? Secondly, after you've found them, how do you get them qualified? And then kind of our third big topic is marketing materials. How can we help your business grow by going out and finding these borrowers? So first, in fact, you already mentioned it in the intro, is realtors. We have found, and just a little history on Angel Oak, we've been doing non-QM loans for over 3 years. Even we started doing them before the QM, non-QM designation came into being. We started just prior to that. And also to clarify, because we have gotten this question before, we are a wholesale and correspondent lender. So anyone who's an originator out there on this call, we're here to help you. So just wanted to get that out of the way, make sure everybody understood clearly that we are in business to do business with you as an originator. So the first, most obvious, but the biggest opportunity is really the realtor community. And the realtor community it's the need. What the need is right now is just an education. Realtors have, post-crisis have really been the first line of defense. They have seen loans and deals fall apart because the borrower did not fit into that tight agency bucket. And so realtors have learned over the years not to spend any time with a potential buyer if that buyer isn't let's say a Fannie Mae buyer. And so they have the questions to ask to weed through those. And we've seen it. The biggest opportunity as an originator is to go to your realtors, either the ones you currently do business with, or just as importantly, the ones that you'd like to do business with, and educate them on what's going on in the mortgage market. Tell them that there are now opportunities for these non-QM borrowers to be homeowners. The examples that we see is going to realtors that you may not even have a relationship with and simply say, can I have a look at the loans that are falling apart with another lender, and starting there, because no one wants a deal to die. We already talked about there's limited deals. So everyone has a lot of incentive to get every deal that comes in the door to get it done. And so if you started the conversation by, let me take a look at your turn downs, that's a great intro. And then if you get the opportunity to save that deal for that realtor, then you absolutely have the ability to ask for all their business. So kind of a door opener, and it works. So realtors would be first and foremost.
And I could see this, obviously this would be, guys, once you get through this webinar and you start your relationship with Angel Oak, you'll become very familiar with their products and being able to present. So this would be an excellent thing a topic to call around to the local real estate offices in your area and say, hey, do you guys do presentations? Do you have office meetings, presentations? I'd like to do a presentation on not what we call non-QM borrowers, or borrowers that might not fit the current mold. And this is a really great opportunity to get in and do a presentation with your office, because there might be some deals that have been turned down in your office or whatever that we might be able to revive. So can I come in and do a little presentation? I think you'll be very surprised at how many real estate offices will say, yeah, sure, come on in. And then you've got an active audience, and so go ahead.
Right. And not only that, Frank, we have account executives all over the country that would be happy to join you in those presentations.
Wonderful.
So if you're not comfortable even with the products and programs, because we're not going to spend a lot of time on that today, but we want to help you understand them. But a local AE would be more than happy to join those presentations and kind of be a resource and kind of reiterate what it is that what the opportunity is for these realtors.
Cool.
So, all right. So moving on, another big source is builders. Builders, their business model is built on selling every house that they build. And if the more outlets they have to get loans done and to get deals done, the more interested they're going to be in talking to you. Not only just builders, but there's builder mortgage companies that may not be participating in the non-QM space. We see those types of loans every single day. So I would strongly encourage, if you're in a market where there's a lot of new construction going on, get to those builders, find out where their mortgages are going through, or if they have their own mortgage company, and get to the mortgage company and get to the builders so that you can get referrals that way.
Yeah, just it's pretty much the same thing as the realtors. Just get in there, let them know what you got. You know what I mean? And call on them on. And here's the other thing too, guys. Don't go one time to these builders and then never go back to them. I mean, if you make it a routine, if you take the next 3 months or 4 months and once a week hit the local builders in your area, and once a week you're actually in there, then some fruit will come from it. This isn't the kind of thing. You can come in and leave a card and have a quick conversation with one salesperson in a builder, a subdivision, and then walk away and expect to get all that turned down business. It's just not going to happen. So just be persistent. Right. Just be persistent about it.
Good point. Good point, Frank.
Yep.
So kind of a third category that we've seen people have a lot of success in is with these lead generators. The history of the last few years is lead generators. They have filters, and when a borrower says, I've got an X credit score, or I've had this type of credit event 2 years ago, that information is gathered by these lead generators. And what has happened in the past up to now is no one wants those leads. So the lead generators, they find the borrowers or the potential buyers that want to get a loan. They answer a question that puts them outside of the Fannie Mae or the agency box, and they're immediately almost disqualified. And then they know they don't go anywhere. So these lead generators, they're sitting on all these leads with no one to give them to. So if you have contacts in the lead gen world, or your company does, I would strongly encourage going to them and saying, give me these turn downs, and here are some parameters, and we can work with you on even setting up what parameters are the loans that we can do, and that you would be able to offer, so that you're not wasting your time. But there is a big difference between the agency qualifications and what our requirements are. And so that pool of borrowers are being identified through lead generators, but they have nothing to do with them. And there's really two huge factors in that. One is you can negotiate a very good price from the lead generators because their current fee for those is zero because nobody's buying them.
Yeah.
So, you can be pretty aggressive on your negotiations. The second piece is it's so much less competitive. If there's a lead for a borrower that has a 790 credit score and wants to put 30% down and is answers all the, checks all the boxes of a perfect lead, then that game is who gets back to them first. It's a speed response kind of game. But in our space, that's really not it. It's who can make the product work for that borrower. So, you have less competition. You can get these at discounted rates, and you can just find, additional business.
And just to clarify, lead generators, we're talking LendingTree, LowerMyBills.com, the typical guys that lenders would be paying money to receive the leads.
Exactly right.
Okay. All right, cool.
So, yep. And okay, another big source. There are, and there always are going to be, loan officers whose companies will not participate in the non-QM space. The most obvious example is the big banks. If you have friends and know people that are LOs at a big bank, they're not going to be able to take care of a borrower that falls outside of the agency guidelines. So non-QM is just is not a market that they participate in, and not likely a market that they will participate in the near term for sure. I had a situation earlier this week, in fact, Frank, where a friend of mine had contacted his originating friend at a big bank, and it was obvious to him within a few seconds. The originator's response was, "Sorry, I can't help you." And that originator at the big bank basically lost a customer because he provided no options. And if you went to another LO and said, "I'm not here to get your customer, I just want to help save deals," and especially if you start talking about the impact from a realtor referral to one of those loan officers who can't offer these products, that's all they want to do. They just want to make sure that a deal gets done, because if all they do is say no, they're likely not going to be getting that many opportunities in the future. So painting that picture, helping that LO understand that, just send them to me, and I'll try to help them out. I'm not going to take your referral source. I'm not trying to take this, anything other than this loan. I want to help these borrowers get into homes.
Yeah, and you're saying big banks, and I just want to make sure everybody understands too, but also consider your local banks and credit unions. So I'll give you an example. I'm sitting here in an office in downtown Vacaville. I can literally walk to 3 small banks right now. Across the street, I have a U.S. bank. I can assure you that at U.S. Bank, they want to do mortgages. They have somebody over there that does mortgages, but they are not going to do a non-QM deal. I guarantee it. I also have a Bank of the West. At the Bank of the West, once again, guaranteed there's an LO in there trying to do mortgages for all of their bank customers, and they are not going to do non-QM. And across the street, I have First Northern Bank. And I know for a fact they have loan officers in there, because that's the bank we use for our company, and I'm in there all the time, and I see him sitting there. I see the mortgage guy sitting over there, and they don't broker, and they don't send loans out, and they're not going to do non-QM. And so again, if you had a route that you did once a week, say I'm going to go stir up some non-QM business, I'm going to go hit my local banks, my local guys here, my credit unions in my area, go visit those loan officers. Then I'm going to go visit my local builders, you know what I mean? And hit those guys, and of course hit the real estate offices. But adding the builders and the local banks with the non-QM product as your tool to get in there and get some business out of them, that's brilliant. And it is going to work. I mean, I think I said on the last webinar, Tom, we had a guy who watched one of these webinars a while back, Angel Oak webinar, picked this up, and went out there, and he was, he got back to us and said, "Oh my gosh, man, it's a little gold mine. I'm getting a couple deals a month out of these little local banks that they can't do these deals, and it's just nobody's asking for it. Nobody else is in there, and so anyway, go ahead."
Well, so think about this, Frank. There are 51% of Americans have a FICO score below 680. Wow. So half the population is below a 680, and big banks, small banks, credit unions, community banks, they're not participating in that space,
right?
Except for perhaps a little FHA business here and there, but But if half the population is below that 680 FICO score, there's just so much opportunity here, and not everyone below a 680 deserves a loan, but it's a big pool of buyers and borrowers to start with.
Exactly. Yeah.
So
you don't know unless you get them. Yeah.
That's right. Another big category of referrals that we've seen have been accountants and financial advisors. One of our fast-growing and prominent programs is our bank statement loan for self-employed borrowers. These are borrowers that just, based on traditional income calculations of tax returns and things like that, they're not going to qualify because they have a good accountant or financial advisor. So if you went to accountants and said, "Do you know of good quality borrowers who their tax returns don't reflect their income and they want to be homeowners? If you do, please send them to me." There's over 15 million self-employed people in the U.S. So, how many of them have aggressive accountants? Probably a whole lot. That's one of the big reasons people become self-employed, so they can write a lot of their life off and not show it on their tax returns. So, this is just a way. We qualify them. We make them ATR compliant. We look at cash flow. So they're still quality loans, quality borrowers. But if you went to these accountants and said, if you know anybody like that, please send them to me and let me have a conversation with them and see if I can get them in a home.
Yeah, it's good thoughts, man, for sure.
So
love it.
All of these kind of require what you and I were talking about, what your show was earlier this morning. It's the resolution efforts. You're going to have to get out there, and you've already said it a couple of times. You got to get out there and get out there more than once, and put these programs and put yourself in front of these referral sources, and they're gonna give you a chance. These buyers are out there. Everyone just needs to know that those buyers now have an opportunity to actually get a loan.
And I tell you what, the CPA, the accountants, the bookkeepers, these individuals, they do tend to be very refer happy, and the reason being is because a lot of times that's where a self-employed person will start. They'll when they're trying to go, God, I want to get a loan. Who should I talk to? Maybe my bookkeeper knows. Maybe my accountant knows, and
right.
And you start there. And so they're just a really good source to be plugged into. And so far we've talked about realtors. Everybody knows realtors, right? But we've talked about builders. We've talked about local banks, now accountants and financial advisors. There's 3 other sources here that you can draw business from. And let's be honest too, a couple of these sources, or this source anyway, at least this source, not only can you get non-QM deals out of these guys, but you might stumble across some A-paper deals while you're there with these guys. You know what I mean? So, great advice.
Yep, it's all about just educating and exposing your referral network and growing your referral network. I mean, that's really kind of the name of the game here.
Sure.
All right, so we'll move along. So let's talk about the next phase. You've gone out and you've gone to the referral sources, and they've sent you someone to speak to. I just now kind of want to change gears a little bit and introduce everyone to our website. You can see here, angeloakms.com.
Okay.
Mortgage Solutions, angeloak.com, angeloakms.com. But that is going to have really the resources that you need from here on. So once you go to our website, we have all kinds of tools that we're going to go through. Not all of them, but I'm going to just show you a couple of really big ones.
Okay.
First, for those that are not doing business with us, we have this contact us page, and you can click on that, find an AE, and we have a helpful map.
I'm not seeing that. Are you showing?
What's that?
I'm not seeing that. What? There you go.
Oh, you're not?
Now I do.
Oh, okay.
Yeah, there we are.
Okay. Yeah.
It took a while to get there. Yeah.
Okay. All right. So this is the find an AE, and you have the state wherever you are.
Oh,
Green
cool.
is where we are doing business today. Click on it, and it'll show you who's in your markets, and you can reach out to them.
All right. That's awesome.
Yeah. So going back, sorry, it looks like we're working a little slow on the internet this second. But okay, so you've done some marketing of yourself. You've gotten out there and you've got a deal. This is something that we've created. It's right here on our main page. It's called Quick Quote. Quick Quote is really the first place you should go when you're speaking to a borrower who you find out or become aware that you're not going to be able to get it done through an agency loan.
Yeah.
So this is it. Quick Quote form. We ask a few questions, and I can just show you real quickly how fast it works. But what's their credit score? Loan amounts, we have categories. So let's say 417 to 750. Loan to value, we'll just say 70%. The average loan to value on our loans is actually 72%. So we're doing pretty low loan to value loans, although we can go up to 90 for some borrowers. And then a housing history. We have recent foreclosures in the last 12 months, but let's just say this borrower is 0 times 30 for the last 12 months. purchased, full doc, owner occupied, that's already pre-filled, but you can change that. But as soon as you just answer those few questions, it pops up with what programs we have available. And so you don't really need to concern yourself with the name of the program. It's just something if when talking to someone at Angel Oak, you could reference. But right here, it shows we can do the 70% loan for that borrower. The rate on that would be 5.5%. The max loan to value for this borrower, we could actually do a 90% loan with no MI. And then just give you some high level residual income, seasoning from a bankruptcy or a foreclosure, and how many months in reserves we need. But it's movable. You can change any piece of it. Let's say instead of full doc, we want to do self-employed bank statements. So there, boom, 70% bank statement income. There's the rate. Instead of a purchase, we want to do this as a cash out. It continually keeps up with whatever it is you're requesting.
Yeah.
So it's a really, really great resource to start the conversation with the borrower. If you have if something hits here, that there's a chance that we can get something done for this borrower.
Yeah. Cool. And this is not an unrealistic scenario. The self-employed guy can't get his DTI to work out because of because of QM stuff, and but he's got some cash, he's got decent credit, he wants a $730,000 loan, you know what I mean? I mean, this is a realistic scenario, and I know you guys, of course, you can go the lower FICO scores and
all that stuff. We have all the categories here.
Yeah,
I'm just showing you an example.
Yeah,
so it's really kind of just. We call it quick quote for a reason. You can get here, you can put in a few data elements, and then find out exactly what it is that the borrower may or may not qualify. So let's say you've done this. You've talked to the borrower. We put rate on here. I wouldn't focus in on the rate because we do have to look at the loan and do a little bit more, which I'm going to show you. But you can at least start talking to the borrower that this isn't going to be a Fannie Mae program. This isn't going to be a Fannie Mae rate because we're looking at 24 months bank statements. You're falling, so you can really start to become that consultant to the borrower instead of just, hey, I've got the best rate. Kind of how you have to compete in the agency world. So this is how you do it, how you start the conversation, and after you've had the conversation and the borrower seems like they want to move forward, it's really simple. From this page or from our main page that we were at a second ago, you click right here at pre-qualification request. Make sure you can see that, but it's in blue.
Yeah.
You see the little finger shows up.
Yeah.
Pre-qualification request. That's going to take you to the next stage of getting a borrower qualified. You would select the AE of ours that you work with. So you pick the AE. You fill out your information so that we know how to get back in touch with you. Answer a few questions, upload a 1008, a 1003, and a credit report, and then hit submit at the bottom. You can add any comments you want right here.
It's pretty easy to get the ball rolling, and that's what I like so much about your guys' system. I can jump in there, kind of pre-qual the guy real quick, kind of see, I go, okay, this guy is non-QM, and please understand, guys, non-QM doesn't necessarily mean bad credit subprime. It means just non-QM. I don't fit QM, right? I've got some weird thing that's not making this perfectly lendable borrower fit into the QM box. So I've got this guy. So real quickly, I can see, okay, it looks like they've got a product that might work for this guy. I can come over here, answer some questions, upload the PDFs of, a 1008, a 1003, and a credit report, put some comments in, push go. I've got the ball, I'm starting to get the ball rolling here. I mean, this literally could have taken me, I don't know, 3 minutes. I mean, you know what I mean? To get something going,
Right.
So very cool. Yeah,
absolutely. And that's it. And then that's going to go to the account executive that you selected. We're going to look at that 1003 and 1008 and credit report and really make sure this borrower fits. I think it's really important for everyone to know that, when we're doing that analysis, we're trying, with our experience doing this over 3 years, this is all we do. We don't do any agency loans at all. that we know what to look out for. What are, kind of the gotchas. So we're going to spend some time.
What's the, if someone were to do this, how soon could they expect to hear something back from you on 12 submission?
Well within 24 hours.
Okay.
Just depending on the complexity of it, we might have to dive a little deeper, but you'll definitely hear something back within 24 hours.
Okay. All right, cool.
So cool. Those are kind of the online tools. I wanted to show one thing because we've been asked about this, if you don't mind.
Yeah, go. Yeah, do it.
Going. So the quick quote tool that I just showed, we have a lot of our customers actually put the quick quote, like the quick quote app on their phone, on their smartphone.
Nice.
So you can be out with a realtor or in a builder's office, and they can run a scenario by you, and you don't have to say, hey, let me write this down and check it out, and I'll get back to you. So I have just a really quick tutorial that I'd like to take you through. But go on your Safari or whatever your smartphone is. You type in angeloakms.com. Takes you to this page. Let's see. Then we go.
It's angeloakms.com, right? From
angeloakms.com. On that main site, you'll see quick quote. So just click on that. That'll take you to this page. At the very bottom, and this is for an iPhone. But there's a little box with an. Can you hear me okay?
Yeah, sorry for the noise in my office. They just made a sale back here, so they all go crazy.
Oh, okay. To celebrate. That's good.
Okay. Go ahead.
All right.
Keep going.
So you have a box with a little arrow pointing up. You click on that box from the quick quote page. You say add to home screen. This is exactly what's going to happen on your phone. Then you name it something. It'll say quick quote form. So that's probably just fine. If you want to say Angel Oak quick quote or whatever, you can do that. You click the add button, and then voila, you have a quick quote app on your smartphone.
That is freaking awesome. I'm doing it right now just because I think it's so cool. Let me see.
Yeah.
Yeah. That's so cool because you're right. I mean, now you're out, you're making those calls, the little local bank, whatever, or the real estate office or the builder or whatever, and the guy goes, yeah, what about this guy? And you can just go, let me try. You got it ready to go. So
yep.
You just
don't have to remember websites or links or anything like that. You can answer the 5 questions from your smartphone and have an answer for somebody within seconds.
Oh man, yeah, I'm doing it right now. This is so cool.
All right, so while you're doing that, I want to just kind of go on to the marketing piece.
Wow.
You got it done already, Frank?
Yeah, I've got it. Yep. It's on my dash. It's on my on my phone. That is super cool. All right. Well, this has been awesome. Yeah. Let's see. What about marketing materials? How can we get some marketing materials to get the word out?
Okay.
I go call on these places. So, I can leave them with something. I can go here. Hold on to this.
You got it.
What do we got?
You got it. All right. So first and foremost is you need to be an approved customer with Angel Oak Mortgage Solutions. So on this web page right here, it says broker package. You can click on this and get to our broker package right here, download it, get it filled out, and get it over to us. We have this broker user access form. But when you do that, we'll give you login credentials. And you can see right here in the top right-hand corner, anywhere you are on our webpage, you click log in. And once you have your credentials, you click log in, and then it takes you to right here, broker flyers.
Nice.
And this is really how you're going to take these programs up. Another set. Wow, it's a big day over there.
Yeah, they're knocking them dead in here. Well, you know why? Because they consistently call. So that's what they do.
There you go. It works for all of us.
Yeah.
So anyway, we have just all these flyers that we've put together.
Rad.
We've put them through compliance and regulations. All you have to do is click on one, and then you add your logo. You add your information right here on the form, and you print it, and it's yours. This is your product. You're not representing an Angel Oak product. You're representing your own products and programs. So when you're calling on these realtors and builders, take flyers with you.
That's so cool, man. And that's what everybody needs, is just something to go out there and hand out. Let me ask you this, because I know this question pops up a lot, is I'm a loan officer. How do I know if my company might already be approved with Angel Oak? How can I check on that? Is there a way to look, or do I just call?
Well, there's not a way to look, but there is a way to reach out, and I will just, I'll put my phone number and contact information right there. Shoot me a note, and I will let you know. And if you don't know who your account executive is, I will get you to the right person to help you and walk you through any of this process.
Right.
If your company is already approved, it is so simple. We need one little form filled out that has your name and NMLS and a little bit of information. Then we get you put into our system, and you could have access to these flyers, almost immediately.
Cool. That's kind of what I was looking for. And don't forget, guys, we're going to get this information out to you. Please write this down, of course, while you're watching, just so you've got it. You can get a hold of Tom. But we're going to get this all out to you guys after the webinar, no later than tomorrow. So you'll have this information. That was awesome, and I think we'll move into some Q&A. And before we do that, there are some frequently asked questions that I think we should just go ahead and address now. It's probably going to answer a bunch of questions before everybody starts chiming in. So let me just kind of run a couple of them by you real quick. One thing that we probably get asked a lot of Angel Oak is your non-QM. So does that mean within your own guidelines, do you make exceptions on loans from time to time on your own guidelines?
Frank, that's actually an awesome question, and really, because we do. In fact, we make exceptions on almost half the loans that we close. We are in the non-QM space, but really what we're doing is make sense decision making. So, we talked earlier about pre-qual and the process. Sometimes it might take a little bit longer because we are trying to, if we believe a loan is a good loan, we try to see, can we make this loan? If it's a good loan, we want to make the loan. So in fact, we say our underwriters are trained, don't let a guideline get in your way of making a good loan. So, there are some hard guidelines. I mentioned we could go up to 90%. We can't go above a 90% loan to value. We have a 50% back end DTI that we can never exceed. So there's some hard guidelines that we can't make exceptions. But outside of those couple things, if it's a good loan, we're going to find a way to make it work.
Nice.
And that's really, again, it kind of goes back to our expertise. This is all we do all day, every day. So we know what performs and what doesn't because we've been doing this for so long. And that allows us to make exceptions on a regular basis.
Cool. Another frequently asked question, I'm sure, is, and I know you did specify this, but just one more time to make sure, you're not doing any FHA, VA, or Fannie Freddie deals, right?
We are asked by our customers if we will because they love doing business with us, but we don't. Okay. We are only doing non-QM.
Okay, good. Well, that's good to know. I mean, you are the non-QM source, and I kind of like that. Yes. It's like, this deal goes there. It makes it easy. Yes. How about this? Often with your products and other products, there's reserve requirements and down payment requirements. Are you guys okay? Are you guys okay with gift funds on that type of stuff?
Absolutely. Okay. We allow gifts on all of our programs. So the person who qualifies for an 80% loan, but they don't have the money themselves, but they can get a gift from a family member. We're all for that. That's the skin in the game, even if some of that is family skin or someone else's skin per se.
Yeah, it's true.
But
Yep. Uncle Bob doesn't want to lose his dough. You know what I mean? He wants to get that back. It is
someone's holding them accountable.
Yeah, it's a gift. Yes, it's a gift. But someday if you sold the house, you wanted to give it back to me, I wouldn't complain. You know what I mean?
Right.
So no, I get it. It makes sense. Real quick too, let's say we got a purchase deal, and let's say everything else goes smoothly, appraisals and all that kind of stuff. What's kind of the average turn time from pre-qual to close with you guys? Just I know you can't. Nothing's engraved in stone, but just kind of a ballpark, from pre-qual to close. What are you guys looking at?
Well, we actually we monitor that, Frank. So our turn time is 21 days from start to finish.
Oh, okay, cool.
So we're 24 to 48 hours in underwriting initially, about the same to get conditions cleared, to get loans into closing. You have some, the CD wait periods and things like that. But, we have examples of closing loans in less than 15 days pretty regularly. So if it's a well-processed loan with all the information, we're going to get that, we're here to get those to closing. We're 80 plus percent, almost 85% of our loans are purchase transactions. And we know that these loans may have fallen apart somewhere else. So, what didn't change is that closing date.
Yeah.
So, we're given 21 days to get loans closed, and we understand that, and we're here to really make these deals happen and make the LOs heroes.
Yeah, I want to emphasize this too. The newer loan officers who might be on the call. I know how it is to break into this industry, and in a market like today's, where, let's be honest, there's a lot of more seasoned loan originators who are out there calling on a bunch of real estate agents right now, and it might be a little tougher for you as a new guy or gal to break in. But this is an excellent opportunity for a newer loan originator to start trudging up some business, because those places that we told you to go looking for this business at the beginning of the webinar are places that the seasoned LOs right now, they're not there. They're not even thinking about this. And this is a wide open, market for you. If you start going out and calling on some builders and on some local banks and credit unions, and some financial planners, and if you make this a really good habit as a new originator and stay really consistent with it, I think that you'll find that you'll be able to dig up some business as a new guy or gal. You don't have a lot of competition out there right now. You're going to have a lot of competition, in the real estate offices. I'm not going to say don't do that. Of course, do that as well. But I'm saying if you find that you're rubbing too many elbows out there with other LOs, consider this if you're a newer person, and consider going out to those other sources and looking for this business. It doesn't hurt to do this once or twice a week, run around and make some face-to-face calls and see what you can dig up. So let's go to the questions. We've got literally, I want to be out of here in 3 more minutes, guys, and type your questions into the questions. And what I do want you to understand, guys, is if we don't get to your question here on the call, don't have to worry about it, because when we're done with this presentation, all this information gets sent over to Angel Oak, and all of your questions, if you've typed them into the questions box, are there. So they'll disseminate, they'll figure out who's your AE is, get your information to that AE, and that AE will call you to answer your question. Is that fair, Tom? We get to that list.
That's perfect.
Right? Okay.
Yeah, no, that's absolutely. You're right. We wouldn't have time to address all of them today, but there's a couple more you want to throw out there. That's fine, or we can just answer them later.
Right. Yeah, real quick, somebody's saying you got somebody in Northern Nevada. Again, if you go to the angeloakms.com, you go contact us. All the states are lit up there. You can click on the state to see who the account rep is, or the account exec is there in that state. Okay, let's see. Someone's asking if they're going to get a copy of the presentation. We are going to email out this webinar. I don't know if a copy of the presentation goes with that, but I'm sure if you contact Tom at the information that is on the screen right now and ask him for it, would you give them a copy of the PowerPoint presentation?
Yes, be happy to.
Yeah.
Be happy to. And then, we're also, I believe you've already shared, you're going to send out the webinar, so you get to hear me and you talk through it again.
Yeah. Hey, here's a good one. And, this is probably coming from a manager, but what's the recourse to the originating lender in the event of a default?
Really none. We're making all the underwriting decisions. So if we close the loan, the one exception to that, as everybody knows in the mortgage business, is fraud. If there's fraud committed, then there's recourse.
Sure.
But if there's non-performance, that's on us. The good news is, though, we're 3+ years into this, and that's not a concern of ours. The performance of these loans has been stellar, and we expect that to continue. Pretty good. We got. I'll take 2 more quick questions, and we'll wrap this thing up. This is a good one. This is from Eric Tepley. So,
how does the broker get paid? Are the loans borrower paid? So is the borrower paying the origination fees, et cetera, here?
Yes. So the simple answer is yes. All of our transactions through the wholesale broker channel are borrower paid. So any compensation that you receive would be paid by the borrower. But you structure those with seller paid contributions and things like that. It usually works out pretty well. Lender paid has not found its way into the non-QM space yet, just because of things that are happening in the secondary market with these loans.
Okay. Real quick, somebody said, hey, how do I get that app on the phone again? Guys, all you do is go to your phone, go to the browser that's on your phone, whatever the browser is on your phone to get onto the internet, and just go to the website, angeloakms.com. And when you get there at the bottom, you'll see a little like square with an arrow pointing up, and you click on that. And when you get there, you'll be able to say, add this to my desktop, and you just add it to your desktop. And again, it's in the recorded presentation here. You'll get that. One more, and this is more of a technical question. Oh no, that was just somebody saying how awesome you are with your investor cash flow program. Let's see. Okay. Real quickly, and we'll let it go at this, as quick as you can summarize your foreign national program.
Foreign national, I think the best place to start is to define what a foreign national is to us.
Okay.
That is a borrower who lives and works in another country.
Gotcha.
So not someone who lives in the U.S. and is from another country, but someone who lives and works in another country who wants to own property in the United States. And then the second piece to that is that we'll do those loans up to 75%,
okay,
which is a pretty aggressive loan to value in that space.
Wonderful.
So the foreign national who wants to put as little money down as possible, come to us for those.
Fantastic stuff. With that, guys, if we didn't get to your questions, don't worry. They'll get answered. We're going to get this information over to Tom and his team, and the account rep that applies to you we'll get a hold of you and answer your question. So we're going to go ahead and sign off. I want to get everybody out of here within about 45 minutes, which is where we are. But Tom, man, can't thank you enough for showing up and giving this great presentation. I think everybody gets a lot out of this and great information. And I just know for a fact that, you guys, if you just run with some of these ideas and thoughts, you're going to dig up some business. You can't not. If you're consistent with it, you'll dig up some business. So with that, I'll go ahead and unless you have any parting words, I'll just go ahead and sign this baby out.
No, that's great. We look forward to helping everybody out. Thanks, Frank.
All right.